Okay, this is Chapter 7 of Accounting, and we're on Section 2. And in this section, we're going to be preparing the balance sheet information from the worksheet. Okay, so right here you can see that we did the balance sheet on our worksheet. We did that in Chapter 6 together. And now we're going to be taking it to its balance sheet report. So basically what the balance sheet does is it reports the financial information on a specific date, including the financial condition of the business. This is going to show you how strong your business is. So even though you made a lot of money, if you owed a lot of money, your business is not that strong. So we need to not only determine if we made an income or a revenue during a certain month, we also need to make sure that our assets are more than our liabilities. Okay, if your business's financial condition is not strong, there could be anything that happens in the economy. If the economy goes down just a little bit, that's going to cause your business to possibly fail. So you want to make sure that your business has a strong financial statement. Information that's going to be recorded on your balance sheet is going to be the information that we learned back in Chapter 1 and 2 about your assets, your liabilities, and your owner's equity. So that's the information we're going to do. We're going to figure out does everything balance and make sure that what we own is bigger than what we owe. So we're going to report our assets, our liabilities, which is what we owed, and then also we're going to report our capital and drawing and net income onto this. So the information that we're going to need is coming from your worksheet. Then the balance sheet is going to have 4 sections. First of all, you're going to have the header, just like we have had for most of our reports, like our worksheet and for our income statement. We have the header for our balance sheet. The top line is going to be the name of our business. The second line is going to be the name of our report. This one is the balance sheet. And the third one is the date. Now, this date is different than for your income statement on this one because this is a snapshot in time for a specific date, the condition of your business. This is just going to have the date. So this one is just August 31st and then 2014. So to look at the information that you're putting onto it, when you prepare your balance sheet, pretend like this is your line here where you would have had your equal sign if you were writing out your equation of assets equals liabilities plus owner's equity. This side we're going to be putting in our assets. So to do that, we're going to enter the header, which is assets, and we're going to center that on the asset side. Next, we're going to list all of our assets. And we're getting these assets and the information right here from our trial balance. So from cash down to prepaid insurance, because those are our assets, everything we own, our cash, petty cash, all of our accounts receivables, our supplies, and our prepaid insurance. And basically, they're also the ones that have the normal debit balance. So we're going to list everything from cash through prepaid insurance over here on our asset side. The next thing we're going to do is come over to the other side of the paper, and we're going to list the liabilities. Your liabilities are everything you owe. So if we look at this worksheet, everything we owe is our accounts payable. We have 2 of them. So we're going to go ahead and just list those 2 accounts payable over here on liabilities. Then we're going to add them up. To do that, we're going to put total liabilities. We're going to draw our line, and we're going to add our 2 liabilities. So that is the first 2 sections. We've done the assets, we've done the liabilities. The next section we're going to do is the owner's equity. And this one gets a little different. So we're going to put our header again, owner's equity, and we're going to center it. And the only account we're going to list is our capital. Because this is only one owner, we only have one owner's name and capital to list. So Kim Park Capital. Now, if you'll notice, this says $6,474. If I go back to my trial balance, well, the capital was $5,000. So how did we get from $5,000 to the $6,000? Well, here's what we're going to do. So for your capital, to find out what you're going to list on your balance sheet, you're not just taking the amount of capital from your trial balance. You're going to figure the amount of new capital. So capital is everything that we have invested in our business and what we could technically pull out all of that money. So this is going to be everything we've invested minus anything we've already taken out, which would be listed in our drawing account, plus the net income we made for last month. So we already did our income statement to find out what our income was. Now, if it was a net loss, you would have to subtract. So here's the formula down here. You're going to take your capital account balance of $5,000 plus any net income, and we know our net income because it's listed right here on our balance sheet, our net income. And then we're going to subtract out whatever we've taken out of drawing because we already took this money, so that's not in our business anymore. So now we know that our current capital is $6,474, and that is the amount that we're going to list on our balance sheet. In this chapter, this is probably the thing that most students will get wrong because they're just going to copy the information from the trial balance. You have to figure your capital. You take the capital from the trial balance, add in the net income, subtract out the drawing. Now, if you had had a net loss, you would have taken your capital balance from your, this is just an example down here of one who had a net loss. So they had in their capital account, they already had $12,000. They lost $200, so we're subtracting. And they had already taken out $500, so we subtract the $500 from their drawing, leaving their current capital. So basically, take your capital plus your net income or minus your net loss, minus your drawing to get your current capital. So we have our current capital listed here. We're going to then, we want to make sure that we put our totals on the same row. That's why we did not go ahead and do our total assets yet. So now that we know that we're going to skip down here, so because we want to skip down to make sure our total liabilities is on the same row as total assets, I'm going to come back over here. I'm going to write my total assets, draw my line, do my math to add up my total assets. Then I'm going to come over to this side. I'm going to put my total liabilities and owner's equity on the same line as the total assets. And this one you can abbreviate to make sure that all fits. You're probably going to abbreviate liabilities and equity. And then I'm going to take, I already added up my total liabilities here. So I'm going to take my total liabilities plus my capital, and that's going to give me my total liabilities plus owner's equity. Now, we learned back in chapter 1 and 2 that our liabilities and owner's equity is the same thing as our assets, equal to our assets. So does our assets equal our total liabilities and owner's equity? Yes, they do. So we're going to put the double rule to show that these are correct, and we're ready to go on. So this one is going to show you a little more detailed balance sheet recording. So this is not the type we're going to do, but you do need to be aware that this type of balance sheet exists. In this one, we're just seeing a blown up side of the balance sheet on the owner's equity section. So they have their total liabilities just like we did. But then for their owner's equity, instead of just listing the capital, they actually listed it all out. So here was the capital balance for August 1st that we got from our trial, from our worksheet. Okay, then we had our net income. We took out $625. So we went ahead and did the math. Our net income minus what we had taken out in drawing left the $1,474. Then to find out our capital on August 31st, we took the $5,000 minus the $1,474 to give us this number. So this is the exact same thing we got when we did it this way, except we did this on scrap paper and did not actually do it onto our balance sheet. And then they went ahead and totaled it up the same way. So you just need to know that this type exists, and this is actually a detailed list of what we did. However, we're going to just be writing it just as capital. So make sure you figure your capital correctly. Okay, so that's the end of lesson 2. You're going to go ahead and in the next video, you'll see us do work together. You'll also do on your own and application problem 7-2, and that's actually going to finish up all of chapter 7. So you'll want to then complete your mastery, complete your guided reading notes, make sure you got those all done, do your study guide, and you'll be ready for your test. Thanks.